So we're going to be talking about cash flow. So the obvious big question, and with all this conversation around treasury companies and do they still need cash flow? But what happens when they grow so big? So I mean, look, let's just start with the obvious question, right? What are some of your views around cash flow? I know Andrew, you and I, we were just chatting about it now. So just give us a bit of an intro on your thoughts here.
Yeah, hi everyone. It's a tricky one, but what we believe at the Smarter Web Company is that every public company will have Bitcoin on its balance sheet in the future. Obviously, we are all familiar with companies such as ourselves, which are very focused on BTC yield. As an investor myself, as opposed to a CEO, I believe that you should have a relatively diversified portfolio, albeit mine's heavily exposed to Bitcoin and Bitcoin treasuries. So to me, having different businesses offering different things with the exposure to Bitcoin is quite an exciting thing. The obvious thing that you've got with a public company is that you've got certain costs as a public company. You've got staff, exchange fees, broker fees, all these sorts of things. So some cash flow is useful. And I'm looking forward to the chat today to talk about what that cash flow should be and, possible models there.
Yeah, thank you, everyone. So quick background about Prenetics-wise. We listed back in 2022, during the height of COVID-wise. And then for the last few years, we actually been thinking, what do we do with our excess cash? And as well, I think we're quite differentiated. We're still very new into the current in terms of the Bitcoin treasury strategy. But about 3 to 4 months ago, we're thinking, hey, given that we have 80 million in cash, and our business is actually growing like a rocket ship right now, right? So if you guys don't know, you guys see IM8, so IM8's the brand we co-founded with David Beckham last December, and in 8 months, it's now the world's fastest growing supplement brand. We already achieved over 260,000 customer purchases, 6 million servings of these packages here. And it's crazy. We're going to be doing about 100 million ARR just alone this year, right? So it hasn't been achieved in the supplement industry ever. So we felt, hey, you know what can we do with our cash balances? And we've decided that we're going to go heavy into Bitcoin treasury strategy. So we've already announced that, hey, we bought 20 million Bitcoin. We filed for a $1 billion shelf. That's going to be effective in the next few weeks. So I think we're going to be very, very big player in this. And going back to the question is, we do believe cash flow will matter because we are able to buy Bitcoin on a daily basis with our healthcare cash flows, on top of basically being able to buy Bitcoin when we do capital raises, right? So having this dual prong approach, we believe will be highly accredited for our shareholders.
Abel, any comments on just your initial thoughts? Does cash flow matter for a Bitcoin treasury company?
Yeah, I mean, high level, I work at BitGo. We're very fortunate in that we handle a lot of these, the infrastructure for a lot of these firms out there, right? These firms need to make the purchase of those assets. They need to custodize those assets securely. And if they have the intention to stake or lend out those assets, we facilitate the end-to-end process for them. So we're in a very fortunate position where we're in those crosshairs as well. But we're just looking at it from the infrastructure point of view. Right, when clients come to us very early on and ask, what's your thoughts, observations around what other people are doing, the answer is obviously yes, right? Cash flow has to matter because in a broader market like this, where there's a big rush for people to approach these strategies, it's all hunky-dory, it's all well and good, right? But then in frothier conditions, what do investors really look at? They look deep into the financials, they look deep into the health of a company. And what's one of the easiest ways to assess the health of a company? It has to be the cash flow. Right, being able to meet expenses, expenses, etc., all comes back to those fundamentals, which I think at some stage will matter more than ever as well.
Okay, so I guess to make this an interesting conversation, I've got to steel man it, right? I've got to take the anti-view just to hear what you guys think. So let me steel man it. What if, okay, now maybe MSTR is like obviously the behemoth, massive one, but think about when they started, it was maybe $300 or $400 million of Bitcoin that they bought, and now they've grown to the level where the size of their Bitcoin balance sheet is, I don't know, 70 billion-ish in that range, and the actual cash flow is, let's say from the BI side of the business, is relatively small. So in that context, does cash flow, like let's say you do the Bitcoin strategy and you become really big and you grow your balance sheet, you got all these coins in your stack, at what point does the cash flow become immaterial? What do you guys think?
Yeah, so maybe I'll go first. So the question there, though, is, what is the Bitcoin strategy? So from the way you asked the question, I believe that you meant the Bitcoin strategy is exactly what we do at the Smarter Web Company, which is focus on BTC yield. But what I said earlier is that the Bitcoin strategy may just be adding Bitcoin to your balance sheet. And so, that's a fundamentally different thing if that's what you're doing. And I'm not saying that it's not still accretive. I'm just saying that you're almost having 2, 3, 4, 5, 6, 7, whatever businesses. So before I set up my company, I used to run the online side of the biggest investment broker in the UK, 40% market share. And what I learned from that is that simplicity is quite important. So I think what we need to do with, my friend Danny and other people that are adding Bitcoin to the balance sheet is maybe we need to look at the metrics that we're all developing as an industry and think about how we can improve the metrics to make it easier for investors, particularly retail investors, alongside the institutions, to understand the value of the different parts of the business, so that then they can look at things like an MNAV and other components to make those informed decisions. Because if you look at an operating business that's adding Bitcoin to the balance sheet in the traditional way, albeit relatively new tradition that we all use of an MNAV, then it's a bit misleading because you're not factoring in the cash flow, or in our case, the ability to raise capital alongside the cash flow. So I think it's down to us all, as participants in the industry, to think about how we can improve the metrics that we're using.
Gotcha. So if I'm understanding you, it's like you're sort of explaining the the difficulty or the challenge for investors who have to, let's say, disaggregate the operational side of the business and the financial engineering Bitcoin treasury side of the business. Do you guys have any other comments, or how do you guys see this question around, having fiat cash flows and the Bitcoin treasury strategy at the same time?
Yeah, so I think from our perspective, again, we feel that because we're still going to be able to raise capital, to basically buy 100% of the proceeds using Bitcoin, and at the same time we have our cash flow business buying Bitcoin, right? So what that does is it'll easily double the yield on Bitcoin. Right? At the end of the day, that's what's the most important. Bitcoin yield, how do you increase this at the fastest speed possible? So typically, let's say we look at the 3-year rate. So typically, if we just add Bitcoin from capital raises, our yield will be roughly 300%. But if we're also able to buy Bitcoin from our cash flow, our yield will be 700%. Right, so I think that's a clear differentiator. And again, if your question earlier in terms of downturn market, et cetera, why I say then honestly we would be able to even acquire more Bitcoin on a daily basis.
Yeah, and so maybe it's like it helps you, especially in a Bitcoin bear cycle, that if you have, but also I guess the counter argument could also be, look, having a business that is profitable operationally, like on the fiat side of things, there are costs associated with that too, right?
Yeah.
So that's kind of there's an upside and a downside, right? So, and maybe, I guess this could also be interesting. Maybe that's why some of the investors of treasury companies haven't, open question, I'm curious to hear what you guys think. Maybe they see Bitcoin miners as having these high operational costs. And so that's why they haven't, let's quote unquote, rewarded them with an MNAV premium per se. What do you guys think?
For example, right now, again, we're buying 1 Bitcoin daily from our cash flow business already. Right, so what's Bitcoin 111,000 today? If it goes down to 90,000, we'll buy 1.2. Right, so whatever that number is, right? So again, I think that gives you a clear value proposition from the cash flow piece.
On the more mundane point that Andrew brought up just now, right? I think when there's a harmonized approach to metrics standards that are being used, that actually helps the wider industry as well. When we often get approached by regulators, think of some of these sort of SGX kind of folks around the region as well that say, hey, we've got some of these firms that have spoken to us to potentially have these approaches to what's going on in the US as well. What do you guys think about it? What's the infrastructure you provide around it? And ultimately, can we give them the confidence that they will go to market and not have eggs over their face over the long term? If even the regulators themselves can settle on harmonized reporting, harmonized standards, I think that will go a long way as well. Right, to helping investors build their confidence in what they're going to buy and what they're going to invest in over the long term.
Yeah, okay, but let's sort of bring it back to that question of, as your Bitcoin stack grows though, how does that change, right? Like over time, as your Bitcoin stack grows, eventually your fiat cash flow, unless you're able to be extremely successful on the business side, and hey, good for you if you can, but eventually, do you not see it like you would eventually hit a level where it's like the fiat business side of it is just not going to grow as fast as Bitcoin is going to grow? How are you guys thinking about that?
What we often say to people is that with a Bitcoin Treasury company, we're building the banks of the future. And I don't mean we're building a bank. I wouldn't want to run a bank. But we are building the banks of the future. And what we mean by that is we're building a business that's got an incredibly well-capitalized balance sheet on the best asset in the world ever. So what that will allow us to do maybe in 5 years, maybe 10 years, 7 years, whatever, in the future, is to then diversify that balance sheet into other opportunities. So it's kind of like what Danny's doing in the sense that, you know, you're spotting an opportunity that generates cash and you're accepting that there's a potential life on that cash. So if we think about Bitcoin, and let's just for argument's sake say that it's reasonable to say that Bitcoin does 30% a year, which is generally accepted as reasonable. So if you're going to invest something in a business, you know, you want the payback in 3 years, 4 years, maybe if you're being generous. So I think as time goes on, we need to think about things in that way, and maybe in terms of additional cash investment in an operating business, for example, our operating business, because we do have one, then maybe that's the way to think about it. It's a choice, isn't it? You've got $1, £1, wherever you are in the world. You know, do you invest that in Bitcoin, or do you invest that in a business, new business, existing business? And that's how, certainly in my head, I evaluate the payback for things, i.e., will it pay me back in 3 to 4 years? If not, you know, Bitcoin's the answer.
Anyone else want to throw in a comment, or otherwise?
I think if you look at MicroStrategy, right? Clear example, yeah, they have 70 billion in balance sheet on Bitcoin. Their operating business generates 500 million in revenue, right? So I think that's a good example. And I think a lot of companies will want to be in that position, right? To having multi-billion-dollar balance sheet of Bitcoin and a decent size in terms of the business, right?
Yeah. Okay. So at one point, so I guess put it this way: does that mean you don't believe that pure play Bitcoin treasury companies are as viable as ones that have a cash flow? I'm curious, like, how do you guys see that?
So I think they're both viable. You know, our strategy at the moment is to very much focus on this land grab, if you want to call it that, in terms of generating capital to buy more Bitcoin to increase the yield in a beneficial way for our shareholders, because we believe that there's a massive opportunity for this at the moment to build a company that's capitalized on Bitcoin in the future. If we're having this conversation in 5 years' time, I may say the same answer, or things might have evolved slightly at that point. You know, clearly fiat currencies are going to be considerably less, so we might be in a similar position in real terms, you know, the buying power terms. But you know, I think that the market is big enough for multiple Bitcoin treasury companies globally. But then also, I believe that every single company in time will have Bitcoin on the balance sheet. And to me, what better way than taking free cash flow and holding that as Bitcoin? So I think there's a place for everything, you know.
I fully agree, right? So there's going to be viability for both type of options. Yeah, so not either or, right? And just, you know, like Andrew, right? I mean, he was the first Bitcoin treasury company that amassed 2,400 Bitcoin in like record time, right? So that's quite crazy. So there's definitely going to be that first mover advantage. However, I do believe the field is getting very, very crowded right now. Not everyone should be a Bitcoin treasury company. To be fair, it's kind of like SPACs, 3-4 years ago, right? Not all of those companies should have went public, but there are certain few that have went public via SPAC, like Hims and Hers, DraftKings, et cetera, that's done exceptionally well. So I think the same goes for what we're facing here. There will be winners and losers, and we just have to pick the ones that have a great track record, great fundamentals, and certainly some of these will have great businesses.
I'm curious from your guys' point of view, what are some of the challenges you foresee such firms facing in the immediate future, especially given that it is going to become a very crowded space as well?
So if I just pick a challenge for each of those types of businesses, you know, for a pure play Bitcoin treasury company, it's very, very simple, is can you generate yield? You know, we announced another Bitcoin purchase this morning UK time, about an hour ago, Hong Kong time, only a small purchase, 45 Bitcoin. And our yield over a 30-day period is still pretty impressive. So the challenge for us in the current phase that we're at is, can we generate a decent yield, over a 30-day period, a quarter, et cetera, et cetera. If I was positioned right now today with a heavy operational bias, my challenge would be, do I foresee the growth? So standing still is not good enough, just as yield is not good enough standing still. So are you in a growth business? So, going back to me as an investor rather than a CEO, if I was looking at a business, I would say, are they in an industry where they've got a vast growth potential? And that's why IM8 is such a good product. It's doing really well at the moment, but it does have significant growth potential. So you're getting the equivalent of the yield growth. But, if that business, any business this could be, but with decent growth potential, is also adopting the Bitcoin Treasury policy, then, you get both things. And I'd probably also add to that from an investor's point of view, you also look at the risk profile of a business. Even though I love Bitcoin Treasury companies, I run one, I've got almost 100% of my portfolio in Bitcoin Treasury companies. You do have to be realistic that the volatility and therefore the risk profile is significantly higher. So there will be a lot of investors out there that want a business that's got Bitcoin exposure that is less risky. And that's good for Bitcoin.
Okay, so if let's say the medium to longer game is that you have a large balance sheet and eventually you might be looking at cash flow opportunities, and that may involve M&A. So do you guys then become kind of like the mini Berkshire Hathaways or like mini Warren Buffetts? Is that the medium to longer term game here? What are you guys seeing?
Yeah, very possible, right? So I think, to be fair, no one really knows what the future will hold. A lot of it will depend on how the market is. But we do know, at least in the next this Trump administration, crypto and Bitcoin is going to be a hot market, right? That's something I think everyone can agree with. And then so now the opportunity is for a lot of these companies, again, how do we amass Bitcoin at a very, very fast rate? And at the same time, then it will be how do we build an operational business within such framework?
Yeah, and I guess coming back to what we were saying earlier, as an example, I've heard Michael Saylor explain that he does not want to engage in M&A because that would complicate the case for investment into MSTR or his preferred shares. So I guess you'll see different views out there. There may be some treasury companies where their view is no, we will not do M&A, and others where they'll say, yeah, explicitly, we are going to do M&A. We're going to be like a Berkshire Hathaway and take share in companies and try to operate them and grow the cash flow. So how are you guys seeing that? It's just going to be a different universe of different Bitcoin treasury companies, each with their own appetite or proclivity or whatever, let's say, their inclination of what path they're going to proceed down.
Yeah, I think that's right. And I think we should also make the point that, it's not just public companies that should be adopting a Bitcoin treasury policy. It's any company. So big, small, you can buy half a Bitcoin, 1 Bitcoin, whatever you want. The sooner you start, the better. So private companies should be considering it. And what I believe and, we believe as a company is that, every company is going to hold Bitcoin. And so I think we just have to think, a bit like the world, it's a diverse world. It's a diverse, different type of companies that exist out there. And, the thing that I think is they'll all embrace it as they want to embrace it. And that's absolutely fine. We don't want every company in the world to have the same strategy. That would be very boring. And, to give investors choice of different types of business models, different companies, but all built on the same asset is an incredibly exciting thing as far as I'm concerned.
And I also see that, again, what we've seen also beyond Bitcoin is that there's a lot of other DATs, right? Digital asset treasury strategies involving ETH, Solana, and now so many different types of tokens. So I think in the future, there will be some Bitcoin digital asset treasury companies that will hold multiple Bitcoin, ETH, and Solana. No one's done it yet.
There
But
already are some. I know Phoenix Group in the UAE, they have Bitcoin and Solana. I would not recommend. I'm
Yeah.
Bitcoin maxi. I think everything else is a shitcoin, but you know, people can try. I wouldn't recommend it, but yeah.
yeah, exactly, right? But so maybe that's one case, but there could be potentially many others, right? So in a way, then the public companies act kind of like an ETF, for different types of digital assets.
So when I started my career, which was 1999, the internet was only just getting started. Google didn't exist. And, we will only ever hold Bitcoin on our balance sheet. But it's a very good point that Danny makes. And I think, it's a bit like the internet has grown dramatically over the last 25 years. I think it's more than reasonable to consider that there's going to be a lot of businesses out there with even more different types of digital asset treasury policies to what we talked about. And this is positive. If you think about 25 years ago, a lot of businesses weren't online, compared with now. It's a pretty exciting time.
Yeah. So look, different strategies, different views and philosophies on whether cash flow, how important cash flow is, or are you going to go the pure play way, or what kind of management? We are out of time, unfortunately, so we're going to have to leave it there. But everyone, please put your hands together for Andrew, Danny, and Abel. Thank you.